Good morning, everyone. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar. With the next 1 hour, we'll get you updates from India and around the world, and also tell you about the stocks to keep on your radar today. Well, first things first, let's first get you a quick quick check of the US handover. Now, the S&P 500 snapped its 9-day winning run as uncertainty on tariff deals weighed on the market. Now, S&P 500 shed about 0.64%, while the Nasdaq Composite dipped 0.74%. The Dow Jones Industrial Average, on the other hand, dropped 98 points. That's about 0.24%. Now, remember, the S&P 500 came into the session riding a 9-day winning streak, its longest since 2004. Now, at its low, the Dow fell as much as 253 points, while the S&P 500 and Nasdaq lost around 1% each. Before curtailing their losses, now, the data released on Monday from the Institute of Supply Management reflected stronger than expected services sector activity in April, even as the company executives reported rising concerns about tariffs. Now, the sentiment on Wall Street also improved after Bloomberg reported, based on sources, that India has proposed zero tariffs on steel, auto components and pharmaceuticals on a reciprocal basis and up to a certain amount on imports. But that said, investors remain uncertain about the timeline of these tariff agreements between the US and several other countries. Meanwhile, Treasury Secretary Scott Bessent has also said that they're very close to some deals, echoing comments from Trump, who on Sunday said that accords could come as early as this week. Now, the Wall Street is looking ahead to the Federal Reserve's two-day policy meeting that begins on Tuesday, that is later today, with the rate decision expected by tomorrow.
Absolutely, that's the handover coming in as far as Wall Street is concerned. A very good morning, Kanishka, and let's also go through what happened with oil as well, because you did have a 2% fall coming in near those levels at the lowest in 4 years. In fact, that's the kind of milestone that you're looking at after OPEC Plus agreed to hike production for a second month. When you take a look at US crude as well, even that one lost about 2%, so $57 barrel is the kind of level that you're looking at for US crude. That's the lowest for the settlement since February 2021. Like I mentioned, global benchmark Brent as well fell 1.7%. $60 a barrel is the level that it just about managed to maintain. Oil prices, in fact, have fallen about 20% this year. You do have a lot of factors coming in. On top of that list, of course, you do have some uncertainty coming in as far as tariffs are concerned. Other than that, of course, there's OPEC Plus and their decision to hike output by another 411,000 barrels per day in June quite recently. Before this, they had previously also hiked their output. In terms of their decision coming in, the decision comes 1 month after OPEC Plus surprised the market by agreeing to boost production in May by the same amount. So that was the previous one that I'm talking about. Oil prices in April, in fact, posted the biggest monthly loss since 2021 as US President Trump's higher tariffs have raised fears of a recession that would slow demand for oil at the same time that OPEC Plus is quickly increasing supply. So that largely is the kind of handover that you have coming in as far as oil prices then are concerned. But tell you what, with that in mind, also get you some expert views coming in as far as crude is concerned. Jonathan Barrett, CIO, ETO Group, shares his views on the same. Let's take a look.
It's quite interesting that they would actually do that, considering that oil prices were already on a bit of a slide. Secondly, when you see that the chances that the economy is starting to turn and soften. So it seems to me as being a little bit odd for OPEC to actually decide, to increase supply. And remember, we're looking at about 2.2 million barrels by November. So whether or not they're just trying to get it out, or whether or not a lot of the members actually need cash flow at the moment, which is also a very critical thing. So I get a sense that prices are under pressure. I think OPEC in themselves have made a decision because they actually need US dollars, and as a result of that, I think you'll see oil prices under quite a bit of pressure.
All right, that's the outlook coming as far as oil prices are concerned. Now, moving on, let's get you a quick update on the global cues that we are tracking today. Before that, let's first take a look at all the data that's expected in India today. Now, the April HSBC services data is what we are tracking this morning. Apart from that, the composite PMI's data will also be released later in the day. Back in the US, trade data as will be out later in the day, and as we are tracking the Fed meet as well, the outcome of which will be released tomorrow. In the Eurozone, HCOB data is going to be out today, as well as the services PMI and the PPI. Back in China, the Caixin services PMI data is what we are tracking. Apart from that, in Japan, as we shared, the markets are closed today. Now, in terms of corporate action, the HUDCO board is looking at a fundraising move. Other than that, in terms of global earnings, Advanced Micro is the one that's going to report its quarterly numbers later in the day.
Well, absolutely, and the FOMC meet is something that we're all looking at. For May 6th to 7th is when the FOMC meet is, and the decision and any kind of commentary will be key to watch. But moving on, then kickstarting coverage this morning with the top global headlines. Detroit automaker Ford Motor delivered a beat in their first quarter earnings, but suspended its 2025 guidance amid an estimated $2.5 billion impact this year from Trump's tariffs. The company, in fact, also expects to offset $1 billion of those costs through remediative measures, as well as volume and pricing expectations for a total impact of $1.5 billion in 2025. The automaker has cited near-term risks impacting production. Additionally, also foresees increase in tariffs going forward.
Absolutely. Moving on, U.S. Treasury Secretary Scott Bessent thinks there's a silver lining in the cloud concerning Donald Trump's tariffs, and highlighted that the administration's trade policy aims to level the playing field for American companies and workers. Now, Bessent also highlighted that he broadened the broader economic policies, including tax incentives and deregulation. Now, together with tariffs, the Treasury Secretary believes that the value of Trump's policies is greater than the sum of their parts. He also called the U.S. economy anti-fragile and said that there's never a bad time to invest in America.
Then moving on, the Oracle of Omaha, Warren Buffett, will stay on as chairman of Berkshire Hathaway after Vice Chairman Greg Abel takes over as Chief Executive Officer. This announcement, of course, comes 2 days after the 94-year-old revealed at the company's annual meeting that he would step down as CEO, ending 6 decades at the helm for the legendary investor. In fact, shares of Berkshire also closed down about 5%, lowering the company's market value by $59 billion to $1.1 trillion as well.
All right, then time now to shift focus to some key macros. Now, U.S. services sector's growth picked up in April, while a measure of prices paid by businesses for materials and services raised to the highest level in more than 2 years, signaling a building up in inflation pressures due to tariffs. Now, economic activity in the services sector has now expanded for the 10th consecutive month.
Moving on, quick look at the geopolitical landscape. Then Israel has launched multiple strikes on Yemen, Lebanon, Syria and Gaza, claiming lives of 54 people. Israeli Prime Minister says that Gaza's more than 2 million people will be moved in a new ground offensive as Israel's total blockade, in fact, on the enclave reaches 65 days. According to the Gaza media office, hospitals are just 48 hours away from collapse, and the lives of thousands of sick and wounded are at risk. Netanyahu, in fact, reiterated that the forceful operation is to destroy Hamas and rescue remaining hostages. The IDF, in fact, said that it has attacked sites that it claimed served as a central supply source for the Houthis in the Udaydah port, in fact, in Yemen, following Sunday's airport strike.
All right, then let's shift focus. Now, amid continued efforts to notch a trade deal with Washington, India has gone ahead and proposed to charge zero tariffs on steel, auto components and pharma from the US on a reciprocal basis. Now, according to reports, the reciprocal tariffs have been offered up to a certain quantity of imports from the US. Now, beyond the set limits, imported industrial goods would attract the regular level of duties. Now, the offer was reportedly made by trade officials from the Indian side who visited Washington in late April to expedite negotiations on a bilateral trade deal. Now, additionally, the two sides are prioritizing certain sectors to strike an early deal before the end of the 90-day pause on US President Donald Trump's tit-for-tat tariffs. Now, let's go across to my colleague Sumit for all the details on this front.
Well, India has to finalize this deal with the U.S. as soon as possible. The fall is the deadline, but we are hearing that it can happen before also. Now, to sweeten that, India has proposed zero tariffs on steel, auto components, and pharmaceuticals on a reciprocal basis. But it's going to be up to a certain quantity of imports, what's going to happen in the trade negotiations with the U.S. But beyond this threshold, the imported goods would attract a regular level of duties, which means it will be only allowed till a level. Beyond that, they will not be treated like this. Well, as we know that this offer was made by the trade officials from India visiting Washington. This happened last month, and the negotiations, they are going on. The bilateral trade is expected to be sealed by this fall, but it can happen earlier also. So the trade deal has signed. It can happen before the 90-day pause of U.S. President Donald Trump. We know that in April beginning, U.S. President Trump had put tariff on a number of goods. For many countries, India was spared a bit, but India is the only one country that is having this window of discussing bilateral trade with the U.S., and that's what they are doing it now.
Well, absolutely. Very important proposal as far as 0 for 0 tariffs are concerned on steel, pharma and autos as well. But moving on, then let's get to some more news and updates. Russian President Putin dialed PM Narendra Modi and strongly condemned the recent attack in Pahalgam. He in fact also conveyed deepest condolences on the loss of innocent lives and expressed full support to India in the fight against terrorism. Also emphasized that the perpetrators of this tragic attack and their supporters must be brought to justice. Both leaders in fact also reiterated their commitment to further deepen special and privileged strategic partnership. Let's go across to Sumita, who's standing by with some more details of this. Sumita, take us through what was discussed in this particular call then.
In fact, important developments coming both on the other side of the UNSC and, of course, on the fact that Russian President Vladimir Putin had a teleconversation with the Prime Minister Narendra Modi. Remember, this is not the first time that both sides have engaged. Earlier, a letter was also penned by Putin. And, of course, Sergei Lavrov had also spoken he also had an interaction with India's External Affairs Minister, Dr. S. Shankar. But this messaging that has come out now is extremely crucial. It's extremely relevant and extremely critical. Why? Because of a certain number of reasons. First things first, there has been a significant escalation so far as the India-Pakistan tensions are concerned. UNSC is now involved. But let me quote from the readout that's been issued by the Kremlin. It basically talks about the fact. It says that Vladimir Putin once again expressed his sincere condolences over the death of Indian citizens as a result of the barbaric terrorist attack on April 22nd. Both sides emphasized the need for an uncompromising fight against terrorism in all its manifestations. And during the conversation, the strategic nature of the Russian-Indian relations as a special privileged partnership was emphasized. These relations are not subject to external influence and continue to develop dynamically in all areas. Now, these lines are very, very crucial because, in foreign policy circles here in New Delhi, there was a concern perhaps about the fact that, Russia's support to India could be conditional. But this one, wipes out all of those concerns that have been expressed. And of course, Russia has expressed an unconditional support to India. And it says that no external influence can really impact that partnership.
All right, then moving on, let's get you another development as far as the Pahalgam attack is concerned. Now, tensions between India and Pakistan continue to escalate following that deadly terror attack in Pahalgam, where 25 tourists and a local resident were brutally killed. Now, in response, the Ministry of Home Affairs has ordered civil defense mock drills across multiple states on May 7th to enhance preparedness against potential threats. Across these multiple states on May 7th, now global support for India continues to pour in, with countries like the US, UK, France, Israel and Italy backing New Delhi's position. Now, Times Network's Rishabh joined in with all the details in his report that he filed earlier.
Well, what we're given to understand right now that Minister of Home Affairs has asked all the states to ensure that mock drills take place on May 7th. What are these mock drills? These are basically emergency measures that civilians will have to be told, trained in case there are hostilities. The first one is operationalization of air raid siren, which means that an advance warning will be given to the civilians in case there is an air raid. The second one happens to be training of civilians, students, etc. on the civil defense. Remember, back in 1962 or 1965, what civil defense was a very key feature that helped India various fronts. In 1965, in the area of Chumb as well, civil defense was an important thing that worked for India. Then there is provision of crash blackouts measures, which means that lights, electricity would be cut, and within minutes people will have to take safeguard in places where they feel safe. The fourth one happens to be camouflaging of important installations. Remember, even Taj Mahal was camouflaged during Second World War. Apart from that, updation of evacuation plan. Remember, we live in an era where high rises are common. This wasn't the case in 1971, 65, or even Kargil War, and that's the reason the evacuation plan right now in urban areas are important, and that's the reason that evacuation plan is also being worked upon. These measures were undertaken last time during Ops Parakram, when Parliament of India was attacked in December 2001, and then a 9-month-long standoff took place between India and Pakistan. Back then, such measures were used, and people were trained to undertake these activities. Now, once again, as the tension rises between India and Pakistan, MHA has asked state governments to ensure that civilians are trained in this manner.
Absolutely. Thanks, Rishabh, for getting us that update. Tell you what, we also caught up with experts. Listen to what retired Lieutenant General B.K. Chaturvedi, who's a defense expert, had to say about the mock drills and how well India should be prepared to tackle Pakistan. In fact, we also caught up with Dr. Rajan Kumar, who's an associate professor at the School of International Studies, JNU, to also decode China's position in the tensions between India and Pakistan. Let's go across and listen in to what both of these experts then had to say.
There is a lot to do. These are measures which are being taken. These are civil defense measures. We have to be prepared because anything can happen. Pakistan may also retaliate, respond, and for that, we should be prepared to see that we do not land ourselves in a situation where we suffer some casualties. So these are those actions which the Home Ministry has asked us to carry out, various drills and all. These were done in 65 also, 71 also.
Few supply lines which are very important, and I'm not talking about the military supply line, but the kind of diplomatic support that Pakistan gets from some of the countries. One is, of course, China. So you have to put pressure on China that this is unacceptable, and we have trade with China. We have been trying to build up relations with China, and China would be happy to create some kind of conflict in the region, because China wants to halt the economic development of India, and we should be certain about that. But at the same time, China is not willing to take the cost in case we escalate the cost with China. So that's one thing that we need to do. But Pakistan also gets support from, say Turkey, for instance. Pakistan gets support from some of the Islamic states in the form of what you call Organization of countries. Officially, many of the Islamic countries, they will not directly criticize India, but unofficially there are channels of support coming from those countries. And Iran's say foreign minister, for instance, he is visiting Islamabad, and there are a number of other countries which might be trying to, they are not in favor of war, I'll tell you, but at the same time, there is some connection which is religious in nature.
All right, that's the expert view coming in as far as India-Pak tensions are concerned. Now, moving on, United Nations Secretary General Antonio Guterres also has spoken about condemning the attack, urging restraint and warning against military escalation. Let's listen into what the UN Secretary General had to say.
Tensions between India and Pakistan are at their highest in years. I deeply respect and I am profoundly grateful to the government of people of both countries and their significant contributions to the work of the United Nations, not least UN peacekeeping. And so it pains me to see relations reaching a boiling point. I understand the raw feelings following the awful terror attack in Pahalgam on 22 April. I once again strongly condemn that attack and extend my condolences to the families of the victims. Targeting civilians is unacceptable, and those responsible must be brought to justice through credible lawful means. It is also essential, especially at this critical hour, to avoid a military confrontation that could easily spin out of control. Now is the time for maximum restraint and stepping back from the brink. That has been my message in my ongoing outreach with both countries. Make no mistake, a military solution is no solution. And I offer my good offices to both governments in the service of peace. The United Nations stands ready to support any initiative that promotes de-escalation, diplomacy, and the renewed commitment to peace.
There you have it. That's the word coming in from United Nations Secretary General Antonio Guterres about the Pahalgam terror attack. To tell you what, it's time for a very quick break. On the show, when we come back, we'll get your check going as far as the Asian markets are concerned. So don't go anywhere.
All right, then let's get you a quick Asia market check. Now, most Asia-Pacific markets rose this morning as investors assess trade developments between the US and countries in the Asia-Pacific region, with focus on Asian currencies that have been strengthening on the back of a declining dollar. All eyes are on China's stocks, which resumed trade after the Labor Day holidays amid signs of Washington and Beijing taking a more conciliatory approach to resolve trade disputes. Now, let's take a look at the numbers at the indices. Now, China's Shanghai index is up about 0.3%, while Hong Kong's Hang Seng index is up 0.14%. Now, remember, China's April reading for the Caixin Services Purchasing Managers Index, which measures the health of China's non-manufacturing sector, is expected later in the day. Over in Australia, the S&P ASX 200 benchmark fell 0.14%. Now, remember, Japanese and South Korean markets are closed for a public holiday. Now, if you look at back home, Nifty shut shop at around 24,461 levels. At this point in time, the implied Nifty suggests a gap up opening around the 24,574 levels. Now, this kind of move is also expected on a day when India has reportedly proposed zero tariffs on steel, auto components and pharma on a reciprocal basis and up to a certain amount on imports. So that's the kind of move that we are penciling in at this point in time for the India market as well.
Absolutely. Let's see how that fell out for us. But moving on then to put the spotlight on some interesting market data from the research desk at ET Now, we take stock of how the market has fared over the last decade in the month of May. Here's Sharad to put all those moves into perspective. Sharad?
Well, the May seasonality, if you look at it, Nifty, the 10-year average has come at 1.5%. But mid-cap and small-cap, they have actually bared the brunt. And of course, small-cap coming in the negative as well. Out of 10 times, 6 times Nifty has ended on the positive side, but it's lesser when it comes to the broader indices, be it mid-cap or the small-cap. The highest numbers, if you look at it, there are some aberrations because 2014 data is there, and that's the data in which NDA1 had actually won their election. That's why the mid-cap and small-cap indices, you see the maximum number is coming across. Also, let's look at how the sectoral indices are actually panned out and what the 10-year averages has been, what the performance has been. Metal, pharma and energy, these three segments, they have been in the green, especially pharma, that's down almost 2.7% on a 10-year average in the month of May. The best performing sector is auto with almost 4% gains coming as a 10-year average in the month of May. And do remember that the numbers recently also have been strong, and the rural recovery, that will also aid a lot of segments in the auto segment as well. Also, apart from that, there are certain segments which have at least ended in the green almost 7 times or more. These are the 5 segments which look at Nifty Auto, as I discussed, Nifty FMCG, Nifty Financial Services, Nifty Bank, and also, interestingly, Nifty MNC is making it to the list. There is no index actually which has actually ended in red at least 7 times or more. But the FNO stocks, May seasonality, as per a report by JM Financial, M&M tops the list with 8.4% average gains in the month of May. That's a big number, followed by Kotak Bank, Concor, and also Kia Industries and HAL as well. So this is the FNO stocks in the positive side, but there are stocks which have ended in the red and the 10-year averages. These include smaller names such as Bank of India, it's down 6.2% average, SAIL, PNB, even IFL and Bank of Baroda making it to the list. So largely BFSI names are coming in the FNO space where the May seasonality is not in their favor.
All right, thank you, Sharad, for getting us that market trend for May over the decade. Now, time now for some exclusive details on Zepto's fundraise plan. Sources tell ET Now that Zepto founders are aiming to raise Indian shareholding in the quick commerce company to over 50%. In fact, lead underwriter EAA Alternatives has also reached out to private credit funds for Zepto fundraise. My colleague Anurag Joshi is joining in with all the details.
EAAA Alternatives, the alternative assets unit of Edelweiss, is reaching out to private credit funds for a fundraise by Zepto's founders. Zepto's founders are planning to raise 1,500 crore rupees through a structured debt to raise the equity stake in the startup. Zepto is a quick commerce platform which was founded in 2021, and the loan which is proposed is likely to be secured by the promoters' equity holding in the company. Now, the Zepto founders are seeking to boost the domestic shareholding in the company to over 50%, and this allows them to do inventory-led quick commerce. And right now, the government rules say that the domestic shareholding needs to be more than 50%, which means that the FDI, the foreign direct investment in the e-commerce company, has to be below 50%, and so for the firm to do inventory-led operations in quick commerce, the domestic investment firms are seeking to buy out the some foreign VC funds in Zepto, and the promoters are seeking to streamline the local shareholding level ahead of a proposed IPO. Now, the Zepto IPO, again, which had been planned, is likely to be further delayed due to the current volatile market conditions.
All right, then thanks, Anurag, for getting us all of those important details. Then moving on, the central government has asked states to ensure adequate power supply. In fact, amid surging temperatures, sources tell ET Now that Power Ministry has written to states to ensure sufficient power purchase agreements as well. Prakash is standing by with some more details. Prakash?
Yeah, that's an important development coming in, as we are learning from our sources that the Power Ministry has written to states to ensure sufficient power purchase agreements to maintain adequate availability of power. Sources are suggesting that the states have been told to procure sufficient power to meet any sort of power demand during ongoing summer season. Sources are indicating that the government has held meeting with the northern and western states. In fact, states like Uttar Pradesh, Bihar, Madhya Pradesh are making long-term power purchase agreements. Some states are making their own arrangements, like Rajasthan, Gujarat. These states are making their own arrangements. They're inviting their own bids. But that's a very crucial development from the power generation companies' standpoint, as this development will help them secure more long-term power purchase agreements going forward. Along with that, it is important to note that the peak hour power demand is estimated to cross 270 gigawatt during ongoing summer season, and therefore government is making all-out effort to meet any sort of power demand going forward. However, some emergency plan have already been prepared, and the government is now pushing states to make more long-term power purchase agreements, and that will, of course, help power generation companies secure more long-term power purchase agreements going forward.
Well, thank you, Prakash, for getting us all those details. Now, moving on, the government is mulling over-the-counter or OTC medicines at grocery stores. Now, the idea is to boost access, especially in rural and underserved areas. Now, let's bring in Nivedana Prabhu with more on this potentially game-changing and contentious proposal.
Well, in a significant move, the government is mulling a proposal to allow OTC drug sales at grocery stores. So that essentially means painkillers, cough syrups, antifungal creams may soon be sold at kirana shops. Now, sources indicate that in a recent meeting held by the Drugs Technical Advisory Board, which was held last week to discuss the sale of the OTC drugs outside pharmacies, the government is looking to define and regulate the OTC drug category under the Drugs Rule 1945. But the new norms over here may permit grocery stores to sell non-prescribed medicines without a pharmacist. Grocery stores, though, are going to be required to have special licenses to sell OTC drugs. Now, this particular move, what we're given to understand, is aimed at boosting access to medicines in rural and remote regions. However, the move has already sparked criticism. The All India Organization of Chemists and druggists have opposed the move, in fact, citing health and legal concerns. The IAOCD as well as the IPA say that the move may spur irrational drug use and adverse reactions. In fact, they have urged the government to consult stakeholders before finalizing the regulations. So it remains to be seen when that might come into effect, and more importantly, how that move will be looked at.
All right, thanks for getting us all of those updates. Moving on, then, Adani Cement hits a major milestone of 100 million tons capacity at a record pace. In fact, Chairman Gautam Adani says that it's a testament to India's growth story and a legacy of trusted brands. With Ambuja, ACC and Sanghi under its belt, Adani Cement is now one of the most efficient players globally. The company has a target to expand capacity to 140 million tons by financial year 28. Remember that the unit of Adani Group is the second largest cement manufacturer in the country as well. But tell you what, with that, it's time for a very quick break on the show. When we come back, more news and updates on the other side.
Welcome back. You're watching ET now, and you're watching Market Cafe. Now it's time to get a quick check on the stocks to keep on our radar today. In fact, my colleague Rabinder is standing by with just that list. Rabinder, good morning.
Well, yes, Coforge can be in focus, where company has announced its Q4 number, and company reported a revenue at rupees 3,410 crore, which was up by 4.7% quarter-on-quarter basis, and company reported a margin at 11.8%. So overall, a strong set of number reported by Coforge. Moving to next, can also be in focus, where company reported a revenue at rupees 356 crore, which was up by 3.7%, down by 3.7% quarter-on-quarter basis, and EBIT margin also saw a decline of more than 300 basis point quarter-on-quarter basis. So overall, CAMS reported a weak set of number in Q4. Moving to next, CCL where can be in focus, where company reported revenue at rupees 836 crore, which was up by 15% year-on-year basis, and company reported a margin at 19.5% as compared to 16.3% year-on-year basis. Moving to next, Bombay Dyeing can be in focus, where company reported revenue from operation at rupees 359 crore, which was down by 5.7% year-on-year basis, and company reported EBITDA loss at 12.85 crore as compared to loss of 43.86 crore. So mixed set of number Bombay Dyeing reported. Now let's talk about stock that can be in focus on the basis of news. Firstly, Glenmark Pharma, where company has received a US FDA approval for blood cancer drug. So moving to next, on back of order win, Ircon International can be in focus, where company has received 187 crore order for rural industrial park in Thiruvananthapuram district. Apart from this, Cummins India can be in focus, where Cummins India's parent company suspended its guidance for the full year, and Cummins Inc. has earlier guided for the revenue growth of -2% to +3%. And lastly, Tata Motors can be in focus, where shareholding voting today to approve CV business spin-off.
All right, and that's the latest update as far as the stocks that you should be keeping on your radar bright and early this morning are concerned. But tell you what, let's get you some important commentary. A clear shift in investor interest as uncertainty plagues sentiment in the US despite the turn of events. Under the tariff rhetoric, BlackRock's Ben Powell remains overweight on US equities, even as he says wins and mega houses working in India's favor. Let's go across and listen in.
Now the data continues to be quite strong, actually, in the US and globally. So in the US, we're mostly through the most recent earnings season, and they've surprised to the upside pretty much across the board. But in particular, the big stocks, like it or not, we have a huge concentration in the US around these tech behemoths. So global equities are, again, it's kind of uncomfortable, but we are sort of dependent on how well these companies are going. And the good news is, for now, they continue to go very, very well, driven by the AI super boom, which continues unabated. So the earnings have been strong. That's, I think, the reason why we've seen the S&P up 9 days in a row. By the way, that's the first time that's happened since 2004. So kind of a historic rally for the moment unfolding, which is dramatic and exciting. But the reason, I think, is very normal and much more prosaic, which is to say earnings strength and resilience for now, driving that upward move we continue to see.
Okay. Ben, at the beginning of the year, as a institute, you were a big votary of US equities. Then we saw what could be called as this mid-air turbulence. As we roll forward, let's say by the end of 2025 or a year from now, which end of the equity market or which end of the world do you think will outperform, underperform, and will be in line with market performance?
So the first thing I would say is we think this is really a different global equity market from 5, 10 years ago. At that stage, you could kind of be risk on or risk off. We now think you need to be much more picky, much more selective, even within the umbrella term called emerging markets. They're not all the same, obviously, but we think that's really true in a fracturing world. I mean, sadly, the world is fracturing geopolitically, trading wise, economically, and so forth. And what that's going to mean is more dispersion. So we really need to be thoughtful around what we pick. To give you a couple of answers, we continue to like the US. It's still the epicenter of creating the future. They've still got the universities and the ability to monetize the intellectual property they create. So the US for now really central to the AI super boom, which we think continues. And the data, as I just mentioned, is supportive of that. That's one. Secondly, I'll talk to one emerging market we continue to like, which is India. So India, in a way, it's quite interesting, right? India was kind of ahead of the game in being worried. So had it sell off a few months ago. Now I think we've got a much more interesting position in India with tailwinds, actually, potentially from the geopolitical fracturing, where India is in, I think, a really strong position to carefully and respectfully negotiate great deals with different counterparties, not just the US, but more generally. That's one. Two, OPEC announcement over the weekend. Oil prices falling looks likely to continue. Obviously, that will benefit India in aggregate, different parts of the economy differently, but in the round, that's a good news. And that should give the RBI, if they feel they need it, more room for maneuver. So I look at India as an example of an emerging market which is actually benefiting from a number of these mega forces. Even in a more complicated world, there are still tailwinds out there. And it seems to us at the BlackRock Investment Institute that India is the right side of a few of them.
US markets or in general equity markets are at reasonable levels. Gold is at a record high. Bitcoin is doing rather well for itself. There is no big sell-off in the bond market. I mean, is it one of those worlds where you have problems of plenty? Because too much to choose from. I mean, there is a time when equity does well. There's a time bonds do well. There's a time commodity does well. Right now, everything is doing well.
I think the linkage, through your point there is still, for me at least, is inflation. So I still think we've got a high inflation, particularly in the US. As I mentioned, kind of by construction in a way, tariffs are an increase in price, right? An increase in cost, which feeds through to price. So I would expect to see more inflation driven by trade tensions and tariffs. So I think when we're thinking about investing, firstly, try and stay calm. I know that's easier said than done, but stay focused on your investment goals. Try and stay diversified and invested, because market timing is difficult, right? So we at BlackRock would be much more focused on, as they say, time in the market rather than timing the market. But then this inflation point, I really think is still important. So having a kind of real focus on inflation resilience. And you can take that thought, as you did in your question, in different directions. Equities, real estate, maybe gold, even some of those crypto assets. Like worrying about inflation, I think makes sense. Inflation is already too high in the US and likely to continue even higher, actually, as the tariff kind of difficulties kick through. So stay calm, stay invested, stay diversified. Worry about inflation and express that in different ways through your portfolio has kind of worked over the last weeks, months, and even years, actually. And I think we think at the BlackRock Investment Institute is kind of the right approach looking forward as well.
All right, then moving on, let's get you an update from an earnings candidate. M&M boomed in trade yesterday on the back of a resilient Q4. Stock, in fact, closed 3% higher, delivering a beat on all counts. Splendid market share gains seen across growth engines, SUVs, LCVs, tractors and EVs. We, in fact, caught up with none other than Anish Shah to take a stock of the road ahead for the business.
Will grow mid to high teens. Yeah. At the time we said it, almost everyone was looking at us saying, it's too aggressive, you're not going to make this happen. Here are the facts. Our SUV revenue market share is 22.5%. Yeah. Our LCV market share is 51.9%. Our tractor market share is 43.4%. Our electric three-wheeler market share is around 44%. So at 22.5, I think we still have some room to go.
Let's talk about your BEVs that we spoke about, and you did say that you're seeing a good customer reaction as well, feedback as well on that particular front. In the initial round, you received an advance booking of around 30,000 units or so. What's the status of that right now? Are you seeing some more increased demand? You said there's backlog as well for that.
There is, and we continue to see an increase in demand on that front. Customers who have taken a test drive come back very energized, and I've seen a lot of customers just take a test drive and buy immediately on the spot. It's a very different vehicle. The kind of quality, the kind of features we have in the vehicle, from a technology perspective, a ride, handling, all of those aspects have got some rave reviews from customers. After driving that car, I would find it difficult to drive any other vehicle as well. So that's one that we are seeing playing out now. And we have a number of other electric vehicles also coming up over the next 12 to 18 months. So that's going to expand the EV portfolio and continue to give us an edge in the marketplace.
Mahindra Group has always had a legacy of innovation. What are the new spaces that you're looking at venturing into or incubating? I mean, there's so much happening in the world, right, in terms of disruption around AI, new technologies, automation. Could you give us some color?
So we are using all of that to do what we are doing much better. So specifically to talk about AI, we're using AI very significantly in manufacturing today. And there are multiple areas that we look at, one that we call uptime.ai, which is ensuring that our manufacturing plants are up and running a lot more. With AI, we've been able to cut down 15% time in any downtime that takes place.
I look at the transition phase in Mahindra & Mahindra. When you took over, your first attempt was to fix the house, get rid of unnecessary clutter. Sangyon, a company which would have thought that Indian promoters would acquire and then sell, you took that decision. Now for the first time you made an acquisition. Now the Mahindra & Mahindra last 3 years was in the mode of consolidation. Subsidiaries, non-core businesses. Now you are in acquisition mode. So is the recent acquisition of SMLC, so is the beginning of Mahindra & Mahindra getting hungry for acquiring growth? I mean, are you getting acquisition hungry?
So we are hungry for scale.
Okay.
You're right. We started with consolidation. We pivoted to growth after that. And that's the phase where we drove growth across our businesses. Our organic growth across the group for the last 5 years has been 25% per year. And we feel that organic is a really good way to grow. You don't need to go and acquire something. Difficult to do, but sustainable.
All right, and with that completely timed out on this edition of Market Cafe on ET Now. Thank you so much for tuning in. The market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.